Hello and welcome back to Investing for Generations. Today I want to analyze a stock or one of the most crashed bank stocks in the market and see if this is a good chance to invest. So let's go. But before we start, don't forget to subscribe, like, share, and comment. Thank you. Today I want to talk about Wells Fargo, and as always, I want to take a look in the history of the company and then go through the financial numbers and also talk about the outlook for Wells Fargo and why I guess it's maybe not a good investment, or maybe yes. Who knows? We will see. So first of all, I want to run through the financial data and yeah, just take a look. The actual dividend yield is 7.29%, and as always, when the dividend yield is so high, this is kind of a red flag or at least questionable. And yeah, here we have a payout ratio from 158%, and that's really a red flag. So it's very possible that a dividend cut is looming. And it's not just me who think there is a dividend cut looming. Also, the analyst of JP Morgan said it's very likely that Wells Fargo have to cut the dividend. And of course, with the dividend payout ratio of almost 160%, I guess it's really, really very likely. And it wouldn't be the first time. Also, in the financial crisis in 2008, they cut the dividend, and I guess it could be almost just the same again. We will see. The numbers I really like to look for when it comes to banks are the returns, especially the return on assets and the return on equity. And Wells Fargo right now has a return on assets of 0.13, and this is almost nothing. And yeah, as we can see here, it's lower than 59% of all the companies in the banking industry. So that's not a very good sign. And also the number of on equity is down to 0.09% as of March 2020 by Google Focus. And this ranked Wells Fargo even lower compared to other companies in the bank's industry. That just shows that this company really is in big trouble right now. And also the EPS went down. As I said, also the EPS goes down by a mile, and they really had a bad last quarter here. And yeah, that's terrible, I would say. And the same happened to the stock price, of course. We will see this a little bit later. Then also take a look at the balance sheet. First, on the debt equity ratio, which is 1.45 right now. This is not very good, but also, yeah, not so bad. It's not another red flag, at least. But what I really don't like is the current ratio. And the current ratio right now is just at 0.87. This is maybe not a red flag, but also a warning sign. On the other hand, we have a very low price book ratio of only 0.62, which is historical low. And this makes, on the other hand, we have a very low price book ratio of 0.62. And so it seems like the stock is very cheap. But maybe if I showed you by all the other numbers, maybe there's a good reason this company is so cheap right now. Then also take a look at the management, which is also very interesting with this company. As I told you before, Wells Fargo went through a lot of scandals in the past. So the former CEO just resigned a year ago, and the new CEO is Charles Scharf, and maybe the only thing that really makes me trust a little bit into the company is that Scharf just bought for $5 million shares in the middle of the pandemic crisis right now and in the middle of the crash at March 13th. So it looks like at least the new CEO believes in the company and believes in the turnaround. And after I talked so much about the scandals of Wells Fargo, who want to know a little bit more about that, about the fake account scandal and also some else, can just run through the complete list here on the Yahoo Finance website. So this is kind of a long list. Let's take a look at the price and let's see if Wells Fargo is a buy at the current price. The intrinsic value, or at least my intrinsic value for Wells Fargo, is $38. Right now we are at a price of a little bit under $28, so there's a margin of safety of around 25%, which looks very good, at least on the first sight. But as I said before, there's a lot of uncertainty. I bought my shares on at 2 points, one time at the 9th of March and the other at the 27th of March. And in average, I bought for 31.79. So I'm down a little bit. And at the moment, with the uncertainty all around, I will not add more shares to my position. The risk is just too high, and I think there's a lot of other companies with a more certain future and with a more very good certain future to good prices. So there's no need to take more risk in Wells Fargo. But of course, if they can do the turnaround, this could be a good investment, a good long-term investment. We will see if the new CEO can turn around this big ship. So what's my conclusion? On the positive side, we have a very big bank with a strong brand and a long history right now under the intrinsic value. But is it really under the intrinsic value? This just depends on if they can turn around and if they can win the faith of the customers again. Because, of course, for a bank, I mean, for almost all companies, but even more for a bank, the highest capital they have is a trust in them. And with all the scandals in the past, there's really a lot of damage and a lot of damage in the trust. And it's, as always in life, it's way easier to damage, to destroy the trust than to build again. And we will see if this can happen with Wells Fargo. If this is possible, if they can come back and if they can be trustful again, this can be a very nice turnaround story. And if not, I don't know. I guess they are too big to fail, but even if there is no turnaround, this is not a good investment, even if they don't face bankruptcy or something like this, but it will be just not a good investment because will have problems for a long time. And that's also the negative things. I mean, we have an uncertain situation after all these scandals. And even if this is not enough, just beside all of the problems Wells Fargo built by themselves, um, we are already in a long period of no interest. And it looks like also in the foreseeing future, there will be very low interest rates. Maybe we go to the negative, like we have in Europe at some countries. And under these circumstances, of course, it's very difficult to earn money for banks, for insurances. And just this alone is enough problem, I guess. But as I told you, um, plus the problems that Wells Fargo just did by themselves, this is a lot. This is a lot of problems, and it will be very interesting to see how they go out of this situation and if they will be fine in the future. But as I said before, for me right now, I have my position. I will not sell. I will stick to it. But the risk is just too high to add more. So I will just look what happened and just hope for the best. So that's it with my speedy stock analysis of Wells Fargo. I hope you enjoyed and got some informations. And yeah, just stick with me for stock analysis of another stock out of my portfolio very soon. But before I leave, I want to say thank you to my first 15 subscribers, which makes me very happy. And if you also don't want to miss any of my stock analysis, just subscribe, ring the notification bell, and give me a thumbs up. Thank you. And that's it for today. See you the next time. Take care.